wherever you are joining me at this moment. Welcome to 502 edition of Invest Data Trading Academy live with Ambrose. I will tell you here that the global market still remain on a sell mode, no matter what analysis we are seeing at this time or what investors are looking at now. But the good thing that the sell-off we are seeing has created opportunity for investors. That tells you that no market remain up, like I always say, or down. But in a correction mode or in a pullback mode of any market, it is opportunity for you to do what successful, reposition of your portfolio, and at the same time, know when to buy into a good company. The good news is that as market is pulling back, as an investor, know when exactly to plug into a company that has all it takes to work to rebound powerfully. Yes, as usual, we'll start from the global market, and I'll tell you that look at what is happening in Asia market. Asia market is almost flat and also kind of rebounding at this point. Why? Because also we're seeing that the cool off of tech rally and also the stimulus push that was saw stocks of are slowing down as we speak. But nevertheless, I'll tell you that the fear of rate hike that there's no clear direction from US Fed meeting, and at the same time the higher tariff regime that is coming up with this Donald Trump government. That is also part of what investors in those markets are also digesting. And I'll tell you that Europe is not alone. That sorry, Asia is not alone. That trend is also happening, in Europe. Yes, European market or government also are seeing that yes, they are making effort to make sure that they make European environment or region more attractive for what for investment destination, which also was seeing that many analysts and many also companies are also pointing in that direction because they are seeing a lot of especially with a successful election in Germany that also they are also boosted to restructure their debt and at the same time to stimulate the economy so that there will be expansion which coupled with the recent decision we have seen that the ECB has made in that region almost 4 times we have seen rate cut just to put economic activities. We have seen that is a point also we should also look at. Then if you look at what is happening in US market as we speak now is still also down, also at this hour, the last trading day of the week. Don't forget that since Trump came on board, I've said it in this class again, we have seen a lot of pullback in that market, and that has triggered a lot of what we call a global rebalancing in terms of a portfolio for managers. That's why I say that global stocks or international companies are taking a central stage of revaluation as money flow is what is rushing to these global stock or international company in the midst of great rebalancing or what underway. Why I say so? Because most companies that have international operation with the Fed with the trade decision or trade war that's around now, also the uncertainties of global growth or global uncertainties. I think that many investors are looking at where are opportunities now as we speak. If you look at US market, what we call it P/E ratio is as high as 30, and that of Europe, you can see that it's almost around there 15. That's that stocks in Europe are cheaper than that of what in US, and also in Asia, like I mentioned earlier, because those regions are is it tech driven economy because of their youth, their population, who these regions are more in that business. That's why you can see that they're going to bring new ideas because of the travel youths that are tech driven. For me, that is a good one for that market. That means investors or companies are looking at where. That means in terms of technology, we're going to see more coming up on that. That is why investors are looking at where, and also companies that have international operation. Where are they seeing that which country will have a company post a better earnings? If they have a branch in US, we have a branch in Europe, we have a branch in the yes, we are seeing that in Europe, we are seeing that the companies are doing well, even when the revenue is lower in Europe, but the profit growth is there because the earnings is high. When I say that the P ratio we are seeing there is high because it's a low 15 to 30 in US. It tells you that you're going to put a lower total period to put your money in Europe. And you can see that also in Asia, which is where China is the major economy. They can tell you that both South Korea and China can see that the which there are technology savvy in terms of technology. That also is the thing that will. That is why as we speak now, funds are leaving a US market or economy to this this place I mentioned, especially in Europe and Asia, which is China, because of what the fear of trade war and also global economic uncertainties had also triggered sell-off that are dominated most of the market, impacting negatively on S&P, S&P, Dow Jones, and Nasdaq. I tell you that year to date, I'll tell you that S&P, Dow Jones, and the Nasdaq has suffered which loss. They are recorded about 3.5 down for S&P, while Dow Jones is about 1.4% down, and that of Nasdaq, which is highly hit to have fallen by 8.1% respectively. This tells you that we are seeing opportunity there, but funds are leaving this market to where they see that because the trade war, fear of inflation, trickling inflation is there, and also the high tariff that you are seeing in US, and also nobody knows the direction, the wind that to blow for Fed. Is Fed going to start hiking rate now or start to cut rate? These are the things that all these conditions are making funds to leave US for other destination. As a trader, if you have to put, that means I'll tell you, since even all of these stocks have hit, these indexes have hit all-time high. We have seen that most of them are pulled back. Even some of them are corrected by almost 15% on 10, and some of them more than 10. That tells you that this is a trend that made European stocks or market cheaper than what part of US market, and all eyes are also looking that way. Like I mentioned, Asia we have seen the center for Asia, where Asia has also strength, and these are the things investors across the globe are looking at, where they can take advantage of what is happening in the market. Is also very, very important for us to have this at the back of our mind. But the good thing is that in any market where there is a pullback, it creates opportunities for you to buy into value. And that is why today's topic, we're looking at the result that talking number on that must work at the same time, stock to avoid when market is correcting, because there are stock that as market anywhere in the world, when there's a pullback or a sell-off or a bear market, these are the stock that fall like pack of salt. You need to avoid such stock when you are trading or investing, especially in a bear market or in a market that is correcting or in a pullback. You target those stocks that has all it takes to rebound faster than any other market, and also you see the trend they are taking. Also, the industry where they are operating, the business model of that company is very, very important. Why technicals will tell about the price, but we need to look at what is the back end that will support that price. If the business model of that company is very, very attractive, very strong, then that when the market rebound, that is a place to be. And the good news that both our markets here done in NGS, while Africa market remain mixed. We are seeing some Africa market that is in green as economic data continue to lead the market. This also changing the trend in those economy. For Nigeria, we have seen that our market has pulled back for almost more than straight 5 days now. We are seeing that there's a little rebound we are seeing in the market right now that gives you an insight that yes, after this pullback, what happened? Yes, before now we have seen that our market are hit all-time high. At that particular time, the dividend yield for most companies on the exchange were not making sense. But with the pullback now, actually at the peak of any season, I expect to see that yield will start making sense. Even when we are seeing kind of an inch or a trigger, an uptrend, in fixed income, instruments, especially the treasury bill for two options. I was saying that rate as well, but that should not stand panic to you, because also you as a trader seeing that, or investor, because we are thinking about the future. Yes, if we are seeing this inflation, interest rate, treasury bill looking up, but inflation is very, very key for what to guide the MPC meeting. And we have seen for this year now, we have seen even it was, I said it in the last class on Wednesday. Yeah, we know that this is a result of the base and the year based, and also rebase, and also base year effect and all. But good thing is that if the rate we have seen for inflation for the month of January was a decline for that of December, we also see in February was a decline from what we saw in January. If that trend is sustained in March and April, definitely I'm telling you that we're likely to see rate cuts. If you like, let them be a trend of an uptrend in KGB. Because once MPR is down, it's going to affect every every interest rate in the economy. And it is this inflation that's a kind of a clue for the MPC manager to, and also what is happening also politically. Our production, are we wrapping up? Also, we have seen that the production manager index for the previous months, first January and that of February and March, are not looking bad. And that of February and January and February are not looking bad. Also, I'm looking forward to see that of March, in early or first week of April. But I'll tell you that, good news that the market is trying to rebound. Yesterday, we saw market what we call a bullish hammer, and that bullish hammer is a sign that market will rebound. That's why I say after seeing that you have to confirm. But we saw that bullish hammer on a declining volume. We have seen that volume has gone up different recently, up about the volume are not sustain up and up and down. But today we are going to see how the market is going to finish the week for the month of the last with full trading week or no. Let's say the last week for this, the last trading day for this week was to have another week that will end on the 28th, which is also a full trading week for the month of for March. But good thing that the good thing that the quarter window dressing is already around the corner. We expect that the quarter will end next week. At the quarter end next week, that will also trigger window dressing to usher into the second quarter of the year. This will expect also to play a major role in shaping the sentiment of the market as more earnings are expected to hit the market, especially towards the end of next week. That will expect that more companies have also fixed their board meeting between now and that next week at their meeting, because most of them are not sending to any regulator apart from the insurance and also the bank that they wait for the regulator to approve. Others will come immediately after their board meeting. You must take advantage of all this also in the market to make what informed investment decision. Yes, before we go looking at our topic today, we want to look at what is the state of the market right away. I'll tell you that the market has also started on a good note this morning. Like I've said, if you look at this chart, the display here, was that this is a green a green candlestick, whether it's small or after seeing a hammer, candlestick formation or yesterday, you see that the market pulled back, but there was a resistance that it went up. That is that buyers came when the sellers put the market down yesterday, buyers can now push it up, and that trend has continued yesterday, this morning. Because why? We saw that yesterday was a mixed market, about 55% buy and 45% sell as at yesterday. This morning we are seeing that you can see that before we are only seeing 96, 94 sell. But yesterday we saw a mixed trend in a mixed section that changed the trend. That trend has continued today again. As we speak now, the market is reading 400 and 400 and 104,000. Sorry, 104,000 now 981 for 981.56. That is what the market is reading right now. Okay, so market is up by 400 and 120.75 basic point, representing 0.12% as we speak now. Good news for the market. Also, if you look at the market breadth is positive. We're having 17 gainers against the 9 losers at this hour in the market. For me, it shows that pullbacks we have seen so far have created opportunity for investors to start looking at where to bid their tent, because of what most of the stock are pulled back, providing an opportunity to buy into cheaper stock. And that is the good thing in the market, that you understand where the market is going to take advantage of it anytime, any day you are in the market. It is this thing that guides you to make what informed investment decision as you are trading in any market direction. For me, it's a good news for the market that we are seeing a market rebounding this morning. If it is sustained next week, as we see more results, that will be good for me. It's not the time to panic, rather we have to buy into value. As I always say that when market pull back, you sell, you buy into a weak market and sell into a strong market. Now we are seeing a weak market, opportunity is being reviewed in the market, and also for me, it's time for you to catch and take that advantage. Yes, before we come back to the chart, let's go back to our topic for today. I said we're looking at talking number on what? On Thomas Wax number. Here, this number is a belated figure for the financial year ended March 2024. But it's important that investors look at it, because these are the things that will guide you to make a informed investment decision. Not that because the stock is traded on the exchange and you see the price moving even when all stocks are going up. No, these are stocks that you can treat for that period. But whenever you see a market in the down direction, I would say that those companies without strong fundamentals are the ones that will fall first, like Pacosta said earlier. But in any market where there is stock that are going down, they are the stocks that are defensive, that have all it takes to resist the downturn. Even now, but the rate of kind of pulling back will be small, and also because of strong fundamental, we're going to see the stock sustaining its price. It might not go the way other stock will go, because of what people are selling them off to play for what we call safe haven. But for those stocks that has all it takes, one, you want to look at the company posting a strong number, because these are the things you want to know. And these are stocks that you should avoid. They are stocks that if the company is posting a weak number and the numbers are not good, are not adding up, You know that no, because price feed on earnings. If those earnings are not looking good, you need to avoid those numbers. Especially when you see a company that is posting a decline in the top line and bottom line, it calls for what concern. You must pay attention to that so that you know enter a store that will trap you, either you want to go and nobody to buy it. Look for those stocks that are liquid, that are defensive in nature. As little for you look at other things that make that stock defensive. But for those stocks that are you should avoid in a corrective market or a pullback or in a bear market, a stock that one that their earnings are looking down. And also don't say because a company P ratio is low, you don't know why the company price remain low. Because if a company price remain low, as you see, because you match it with the earnings, it will look up, whether it will look very low. That determines that not all low P ratios that should be attractive. You must know why the company's P ratio is low. Is it because of stronger earnings? Which sector are they putting? Is it because of the price is low, because of the company is not doing well? That's why you must understand how to relate your P ratio in your analysis. People that say yes, P ratio when it's low, they are going to wait for a shorter period to recoup your money. Fine, but we want to find out if the company that is doing well, because for the earnings is growing, that is why we're going to wait for a shorter time. Fine, but not because the stock price is dropping because of the company, either that they are going nowhere and the P ratio remain attractive because prices are low. Not because it's a low price, a low P ratio, you want to buy, you must think twice in that direction. That's why one must look at what is the earnings of this company. Where are the earnings pointing to? Are they pointing to something that yes, that next quarter is going to be better than this quarter you are seeing? You must know that. Or have you seen the company past performance? Yes, we know that past performance is never a guarantee of the future. We have to see the trend the company have done in the previous year. Is that trend being sustained in the new year, financial year you are seeing? It can also give you a clue. That's why you must understand that when the company number is not good, it's not going to support the price will go in that direction. That's why you must avoid company that is posting loss, top line is declining, and also bottom line is declining. And also you must also avoid companies that are highly geared, the high debt. You must look at them. Yes, that this company highly, and also not only that potential no or call potentials or sign or what they that they will have to pay their debt is not there. You need to also play with caution in that kind of company. And also a company that highly dependent on imported raw materials. That company you have to also play with caution, because when a company import its raw material regularly, and this exchange, especially in Nigeria today, that even though we are seeing relative stability in it for some days or weeks now, I'll tell you that's no guarantee. We have seen how that have put a lot of company on the exchange, in a bad shape for almost 3 years now. That means you need to avoid such company. If you are looking at, well, these are the company that also their price will fall when there's a correction or a bear market or a pullback. You must also have it. And also companies that also depend on raw material that is not available, even though it's within Nigeria. Some companies have done backward integration because they know that that raw materials are still here. But you can see, it's also when you need to also know how to trade that kind of company. It's very, very important. And at the same time, company that today there's new management, tomorrow there's no consistency, and also a company where the new management come, it will change everything and they start after before another one come. When there is high, what we call a high turnover of management, that this one come and go, they will not stay 2 years, not stay 2 years. You have to be very careful. There are stock that that also stock that you are not seeing them expanding their operation either by merger or by a company acquiring them, because of all they are not doing well, but still they are struggling. Avoid such company in a period where there's a bull market or a bear market. Sorry, where is there a bear market? But don't forget that in a bull market, both the ugly and the good will go, because liquidity are flowing. Also, in that kind of bull market, you have to trade with caution, because those stocks they say that the other bulls, because of the I also say that when the market is moving up, it drag other stuff. It's supposed to coming down. But when market is coming down, not all stock will go down in that proportion as if the market is going down, because there's talking going for, and also when it comes down, it creates opportunity for new entrants. As the enter, they go to stabilize the price a level. But those stocks that are not in it, and when they are going down, nobody is buying them, to still not going southward. You must avoid such stock when you are trading. It's very, very important to know the kind of stock you are buying, and that's why we have penny stock, we have British stock, we have defensive stock, we have good stock. You know the kind of stocks you are buying. For those that are penny stocks, yes, penny stocks that have good business model are fantastic. Stock that you know that nothing is driving their price. They are just penny because nothing is happening. The result is not there, and people are not seeing action there. Be very careful. Be very careful. You must avoid such company, especially in the down market. But when there's liquidity in the market, that every stock are going on, that's a bear market, a bull market for you. It's a different thing. But a bear market where all prices are looking down, you have to trade with caution, because capital, your capital is king, and you also have to protect your capital in any time any day of the market. Even when you have intention to grow your capital, it's better that that capital is there, that the market will take it away from you. And that's why any investor should understand your goal, and also when you are trading, create your plan to stay ahead of the market is very, very important. Yes, we'll come back to the result that is here. Yes, like I've told earlier, this number, like I said earlier, is a related number, but still, the good thing is that it's gives you an insight that the kind of stock we are investing in. I'm taking this where we have the summary of the of the balance sheet and also the profit and loss account, and that we cannot through that to see the cash flow. But if you look at this page I just displayed now, you can see that yes, the company total equity is also good, but you can see there's a decline there compared to what we are seeing. The total assets also was almost flat. You can see it here. What they are 24, the 2023 is what they are having 2024. You can also see that here. Then also in their what we call liability also inch up a little, but you can see that total equity also slide a little again by -2. You can see it here, but you must pay attention to revenue. Revenue declined marginally 8%, but you have to go further and see the other incomes also declined compared to the previous year. You can see it here, and the profit before tax also, you can see that also there is a decline for almost you can see here for from 43 million to just 5.1 million. Also at the end of the day, expenses also tax income that was seeing there is even more than you can see about 17 million. That means I've accumulated tax they've not paid, which also have arise that put it to this level of 17.6 million as we speak now. But now you can see that the profit after tax is in negative. Even when we are seeing that, you can see this is a mid number. For me, you have to avoid such company. Yes, you can see that tomorrow you see market rushing there, but you have to trade with caution. As we speak now, the net assets purchase about 2 naira 32 kobo. Look at this company, and there's a time that this that was moving. You ask what was moving the price. Nobody knows what's moving the price. But at the end of the day, you can see that yes, market sentiment can move with stock, but in a bad market, these are the stock that start really blow when the market is also down. You also have this at the back of your mind. Want to quickly look at the cash flow of this company. Even also, we have seen that the balance sheet is not robust as expected. You can see also the profit and loss account is also missed. But let's look at what the state of the cash flow of this company. That will also give you more insight what to do at this time. But personally, I've said it earlier that we need to avoid short companies that we have seen that their earnings is missed or declining, especially when the bottom line is in red. You need to know from a positive of almost a in red in 2024, will that trend continue in 25? Yes, we don't know, and we have not seen updates from their first quarter. That is at March 2024. How is their Q1? How is their Q2, Q3? And if you are not regular in results, you don't have information. You don't invest blindly in a stock that you don't have information. You need to also watch and see. Yesterday, I've looked at their asset before. I want to also look at the cash flow itself. This is the cash flow of the company. This is also a relatively small company. Look at the cash flow from this company on net cash flow from operation. Yes, you can see that despite we're seeing negative profit after tax here, but you can see that we're having a cash flow of 18 million, 942,000 against a negative 11.6 million in 2023. Fine, for the cash flow it's looking good, but we need to also see also a good thing that on the cash flow, their operating cash flow is not negative. For me, it's a good one. But let's also give a finger award. Well, I'll tell you that when a company is highly geared, a company that is putting negative mirror and they are trending, earnings is trending now, avoid in a down market. Also, a company that depend on a monthly imported raw material, because the FS today, we know that the FS market at the extent at the top gainer was seeing livestock feed leading the top gainers, followed by mutual benefit. You can see the Reuters Capital is rebounding. You can see Wapik Insurance, see ICO and Owando. These are the top gainers as we speak now. While on the flip side, you can see eTransat, APC Transport, SACO, and also Lasaco and the Datalizer. These are the ones that are on the flip side. But good thing is that we're seeing more buyer right now, and the market is in green if the trend continue, because I tell you, we've seen livestock pulling back for like 2 to 3 days before people start jumping in ahead of what their audited account. And also those financial service sector, for me, they have become more attractive because they suffer losses this one and that made that sector, knowing that these are the sectors that are most consistent in dividend payment for shareholders. And that means for investors in the market, you need to know when you are taking the right position in the right stock is very, very important. Quickly, let's call our indicators to look at this you know stock that are going up now, what the momentum, and also look at the general market momentum. Also start from our looking at our call up, our money flow, and also our MACD. These are very, very important. But we change our T line to our normal moving average, 8 days moving average exponential. Yes, on the market now, you can see that the market is almost trying to resist decline here. Fine, but still below what the T line. We have to pay attention for what for a breakout here. Good thing also, we are seeing that the money flow that has gone as low as even 13 is coming back gradually again. Let's see, almost reaching around 16, still low until the money flow cross 50. When I say yes, fund is back to the market. But like I said earlier, it's a global thing that we are seeing that funds are leaving global some market for another opportunity because of what of global reporting of a portfolio, which I know that emerging market will benefit from them. Even we notice that there are some funds living in the Nigerian market, which was a but I believe that once start seeing positive earnings from the current financial year, seeing the Q1 number for Q1, that also give us an insight to what should we do with our stocks or to our position. For me, there's no cause for alarm in the market, but to buy into value, as I always say, which is the chart was in remain on. Yes, market is down now. Like I said, buy into a weak market. Once across the blue line now, that is a sign that the market also rebounding in up direction, which is also good for any market you are trading. You must understand the market you are trading is very, very important. Yes, for most of our time, quickly look at what is happening on a shorter time frame for the market. We look at 1 hour time frame now to see what is happening there. Let's watch and see what you can see on the 1 hour chart. The market is always almost crossing the T line. That's a good news for me. It's a good one. See that sign of rebounding is already there. MACD is already giving us a sign here. You can see here that MACD has become bullish. Yes, even though it's the first, so you can see it across the upper side, the blue one across the red one up. And money flow is also looking at to be around 16. And this on a 1 hour chart for me is a good one for the market. Yes, let's look at what livestock doing now. What the strength in this livestock? How far will it go? You need to understand how far will the livestock go so that you know that the momentum that you are seeing now in the stock. This is a 1 hour chart. You can see that a 1 hour chart cross the T line. So it's a good one. But money flow is looking down here. But MACD has been a good sign that as if where it has started accelerating, the histogram here has given a sign that we watch very well to see that there's a move in that stock, especially if the actual one come and beat the expectation. You need to know what to do with that stock. If you look at the day chart for this stock, you say yes. And look at the day chart for the stock. Stock is not changing. If we look at another stock now, let's see. We can move to one that is the result chart. It transact has been let's look at the last cycle. Look at last cycle. How far will last cycle go? Will it pull back? Will it continue to pull back? We need to also pay attention to that. We can see last cycle for it. You can see that it's trying to resist the decline. Or look at 1 hour chart to see what is happening last cycle. Last cycle is also trying to resist the decline. Can see it here. It went to coming back again. Let's also consider that. Finally, let's look at the life of Owando as rebounded this morning after crossing 50 down. I see that stock coming up again. Is there momentum that will support the price back to 51 naira? Will that trend continue in Owando? Yes, you can see here that Owando has gone aside more than 51. You can see that this sign here has gone up, but this is a weak sign in an uptrend. This 1 hour, it can move up, has gone up again, go back again. You can see, but money flow show that on a 1 hour chart, one is getting the stock is bullish on a 1 hour chart, but on a daily chart, you look at it to see what is the trend setting on a daily chart. in the daily chart, you can see that the stock is about to look at the T line. So most they want to look at the T line, you see that stock going up. But once that money flow is down and MACD is neither here or there, it's also worth to confirm where the MACD is going. It's very, very important. And that on this note, because of our time is fast spent, I will say thank you. We look forward to see you on Monday on on this session. But for those that are for the paid session, tomorrow we'll be discussing opportunity in the market and this how can you take advantage of these opportunities, which sector and industry that you pay attention, what made the market attractive. We'll be discussing all in tomorrow class. I look forward to see for those also that are taking advantage of discount. I can see those that are not even members paying to take advantage of the discounts for them, and also members. You that a member take advantage of, and those that are also on this platform that are not registered take advantage also to register for the master class, so they can prepare for the next 90 days to make good returns as we as we meet with other experts for 9 hours starting by 9 and close by 4 on the 29th of March. In that talk, in that meeting, they will review the best strategy to trade oscillating market as we are seeing, and also like I said that economic activities that will shape the market in the second quarter of the year. These are the things that we'll be sharing and how you can take advantage of information and position right ahead of others in the market to cash in when the right time comes. On this note, I'll say thank you.